Other types. Other types. There are basically three types of orders. Number one, instant market execution. Number two, sell stop, buy stops orders. Number three, sell limits and buy limit orders. Now let me talk about this instant market execution. Instant market execution simply implies that you are buying at the continuous market price. We will talk about instant market execution now and consider the other types when we discussed support and resistance in forex, so that you guys can understand them properly. For example, a currency pair is presently at $50 and you clicked on buy. What you just did is instant market execution because you bought at current price. I will explain this further. Now let me talk about buy stop and sell stop. Buy stop orders to buy at price above the market price, and it is triggered when the market touches or goes through the buy stop price. Sell stop order to sell when a specific price reached. A buy limit. A buy limit order is an order to purchase an asset below a specific price, allowing traders to control how much they pay. While sell limit order is an instruction to sell at a price that is higher, not lower than the current market price. Now let me explain this further. Let me talk about instant market execution. Now let's say you're trying to buy and you note that okay, the market will be buying from here, from this area. Instead of you setting limits or waiting for any other thing, you can enter immediately. You can enter immediately. That is what we call instant market execution, because you enter the market at the current price, at the current price of 1.0732. That is instant market execution. Now let's say you know your peer will be selling from, or will be buying from a particular place around here. Let's say you have analyzed your peer and you notice it will be buying from this area. You notice it will be buying from this area, and you are busy to wait for market to come back and retrace here before you buy, or you have an important place to go. You have an important place to go. You don't need to keep checking if price has neared there before you buy. You will just set your your buy limit. Setting your buy limit that immediately price move to this area, it should buy. After you have finalized your technical analysis or your fundamental analysis, and it is telling you price is going to appreciate from this area, it is going to buy from this area, and you could not wait. You have an important place to go. You don't need to start waiting for price to retrace here before you take a buy. You can set your limits and your take profit and your stop loss. Your take profit should be somewhere whatever you're targeting, and your stop loss should be whatever you feel it's safer for you. Then the limits will trigger your trade immediately price gets there. Now I set a limit of 1.07255, which means I am expecting price to come back here, because I know price is going to come back here and buy. That means I am waiting for price to come back here. I don't have time to start waiting for instant market execution, to start waiting for price to retrace before I I enter at market price. So that's the help of buy limit. So I will set my limit and wait till whenever price come here and come back anytime I feel like checking my trade. Now let's see if price come back to this area or not. Can you see that price came back and start what? Buying. So instead of you to be waiting for a very long time, you can set your buy limits. You can set your buy limits instead of you waiting for a very long time, and leave price to do whatever thing it wants to do to move to your direction. Or if it is going against you, you have a stop loss to guide yourself. Then if it is to your direction, you have to take profits. Now let's assume I want to sell. Let's assume I want to sell from this area. Okay, fine. I know price will be selling from this area, and I don't have much time to wait for price to get here before I sell. You can set a sell limit. A sell limit, which means immediately price move here and triggered your price, your sell limit price. My sell limit price here is 1.08010, and my stop loss is 1.0879. My take profit is 1.07632. So I know price will be selling from here, so I don't have time to wait. I don't have much time to be waiting for price to come here before I started selling. So you can set your limit right here. Your limit, immediately price moves to this area, it is going to activate your limit. If it will go to your direction, it is going to sell. And if it is going to go against you, it is going to what? Kick you out of the trade. Let's see. You don't need to start waiting for all these activities since you know you'll be selling from this area. Fine. You can see price came back, mitigate this area which I was expecting sell from, and boom, out. My take profits. I am out. Instead of me to be waiting for price to start doing this and me waiting for price to get here before I sell, I don't have much time for that. But since I know there will be a sell from here, so that's the help of sell limits. Now a sell stop or a buy stop. Now let me give you a clue to this. Now we notice that price, let's say, immediately price break this low, it will continue selling. Now you can't wait for price to break this low before you sell. That is where you set your sell stop. So immediately price trigger this area, it will start selling. That is if it is going to go to your direction. So your sell stop is lying here. Sell limits should be above, while sell stop below. So if you miss the sell right here and immediately price break this area, it will continue selling. You can set your sell stop and let's see. Then you'll be in profits. Can you see? The sell stop order activated and started selling. Massive sale. That's the help of what? Sell stop. Now let me give you buy stop. Let me give you buy stop. Now let's say price we buy immediately it break this high, and you cannot wait for price to get here before you enter at market execution, you can set your buy stop. Your buy stop, immediately price activates this and you know it will be buying from here, then you are in. Then put your stop loss whatever place you want to put it. Your buy stop, then your stop loss should be anywhere you want to put it. Then you take profit. Immediately price gets here and activates your buy stop, it will trigger you. Then you'll be in profit if it moved to your direction. Buy stop activated and boom, you are in profit. You don't need to start waiting for price to get here. You are busy, so you don't need to wait for price to get here before you enter at instant market price. But since you know price will be buying from here, you need to set your your buy stop. That is the help of buy stop. Then your stop loss and your take profit, whatever you want to target.